Ladies and gentlemen, welcome back to the channel. Despite Tesla stock being down 3% today, we're going to discuss the path ahead for Tesla, in my opinion. Does today change anything? What do you need to know if you are a Tesla investor? I'm also going to share a clip with you on CNBC from Dan Niles where he says the government shutdown could last a while, but it really doesn't matter for stocks. And I think this is something a lot of people need to hear because, again, you hear government shutdown and you're like, oh my gosh, this is terrible. In all reality, it's likely not. Now, there are calls on Trump today to still release the jobs report tomorrow morning. Whether or not that happens is undecided at this point. Well, it said it wouldn't happen, but it still might happen, and that could be a catalyst tomorrow morning. We do also have some other economic data as well. So those are the things we're going to get into here in today's episode. Hit that like button as well as subscribe to the channel. And ladies and gentlemen, let's get started. So first and foremost, Tesla stock was down close to 3% for a majority of the day today. And as I talked about in the last video, I'm not surprised that this happened, okay? Like, kind of, but not really. You rallied into it. It was really good, the delivery number. And we also had other big news today, a new record for energy storage, for an example. But you got a bit of a sell the news reaction. Now, in my experience in the markets for 7-8 years now, whenever you get a sell the news reaction, whether it's selling the news on a really good earnings or really good data comes out, whatever it is on a certain stock, it doesn't last a long time. It's kind of like a shakeout event, okay? Because if there was people that were like, okay, I'm going to buy the stock a month ago, and whatever happens after the delivery number, I'm going to sell, right? The trading perspective. People after that event tend to sell, okay? But then the selling pressure dies down, the buyers step back in, and the stock proceeds to do well over the next, period of time. Now, as you know, we have left seasonal weakness in September, and I do think October, November, December are going to be very strong months for markets and very strong months specifically for Tesla stock. And I do expect that we're probably going to get some good news for Tesla. I think we're going to get probably new cities and robotaxi expansion over the next couple of months. And that is really the big catalyst at this point that is going to send Tesla stock higher. Delivery numbers are starting to matter less and less, and it's more of a very short-term reaction. It's not the same as like 2022 or 2023 or even 2024, where, delivery numbers really changed how people viewed the stock. I think whether you beat, miss, or stock goes up or down on delivery numbers, it doesn't really change anything from a psychological perspective for market participants. Now, we do have the government shutdown, and the only real negative I see from that, besides you could see more layoffs, which that is to be determined, really it's just a furlough of pay. People are still largely working and they're going to get the money eventually. But question is, how long is the government going to be shut down? How much damage does that do? I do not know. But it does mean that we're not going to be getting some of our economic data. Now, in the very short term, if the data was going to be bad, then that could be good. It does raise the odds that the Fed is going to cut rates, because the Fed would rather cut rates and not get behind the curve if the labor market does begin to weaken. All of those things, most of those things should be positive for Tesla, specifically interest rates coming down. A lot of people think housing is the only thing that gets affected when rates come down or go up. And the auto market is very much affected as well when rates go up or go down. So from a delivery perspective, even though it's a lot less important than it was prior, that is still a material catalyst for Tesla. And I think, to be quite honest, the tide has turned for Tesla. The way that people are viewing Tesla has changed. And even though we did hit a high today of, 460 $70 per share sold off from there. This was positive. And this will be positive for the stock. Just give it a couple of days. Even then, if you look at the technicals, you're still in a solid uptrend. But from a technical perspective, seeing a day like today does not change anything about, again, the thesis or anything like that. I'm still expecting a very strong end of the year rally where the stock is going to close out this year well above $500 per share. Now, even Tom Lee today says he sees the S&P 500 topping 7,000 by year end, says don't be fooled by shutdown calamity talk. And here in just a moment, you're going to listen to this clip from Dan Niles, where he says the government shutdown may last long, but it doesn't really matter for stocks. And you're seeing this narrative starting to be talked about more and more. But I do want to point out having a data blackout could potentially be seen as a little bit of a problem if a government shutdown does last a while. If we don't get the jobs report tomorrow, but we get it next week or something, like that's not a huge deal. And there is calls today on Trump to still release the BLS data even when the government is shut down, which is something Trump could obviously order, although unless it's a really good jobs report, it might not be in Trump's, agenda to release that report, or maybe he holds it hostage over Democrats. Who knows? But today we did get some encouraging signals from the jobs market. Challenger job cuts today, which is planned layoffs, were expected to skyrocket from 86,000 last month to 150,000 for September. And we actually came in at 54,000. So despite the ADP employment report yesterday that was really bad, coming in negative 32,000 versus expectations of positive 50,000, and last month's number at 54,000 positive being revised to negative 3,000, like really bad jobs numbers yesterday, the Challenger job cuts today do kind of reinforce that things are not all doom and gloom out there. Now, with tomorrow, we will still get some economic data even if we don't get the jobs report. We have ISM services PMIs for September expected at 51.7. Last month was 52. Business activity expected at 51.8. Last month it was at 55. Employment, we don't have an expectation for employment, but last month it was 46.5. New orders came in at 56.0. Expectation about 55. And prices came in at 68.9 versus expectations versus last month at 69.2. So, yeah. And then you have your non-farm payrolls, unemployment rate, all of that. The expectation was 50,000 job ads for September, and the unemployment rate was expected to hold steady. But again, we may or may not get that. It's probably up to the president at this point if they want to release it. And again, if it's not in his favor, if it's not showing good things, you're probably not going to see the president release that jobs report and just delay the bad news, if you will. So that is our lineup for tomorrow. Again, whether or not we get the jobs report is very much uncertain. I do think this sell down in Tesla is going to be short-lived. It's not something that is going to last a very long time, and it's not something that I am even remotely concerned about. I did actually put like $150 on some YOLO options, and that's call options, and that obviously did not pan out. But you do not ever want to put yourself in a position where you are dependent on one single catalyst when it comes to Tesla, because this kind of weird shit can happen where sometimes Wall Street doesn't care, and you do get a sell the news event. It happens with Nvidia earnings all the time. It happens specifically with earnings all the time, but other catalysts, it can happen. And I think that's simply what this is today. Now, I do want to play this clip from Dan Niles with Niles Investment Management. He says a government shutdown may last long, but it doesn't really matter for stocks. And this is something I think you need to hear.
Investment Management. What a morning to have you, Dan. Good to see you.
Good to see you too, Carl.
Sounds like you think this one shutdown, could last longer than the one in 18.
Yeah, but it really doesn't matter, Carl. You go back and you look at the one in 18, and during the entire tenure of that shutdown, as I wrote about, the S&P was up 10%. So I think everybody knows this is going to get ultimately resolved. I don't think there's anybody who thinks the government's too small. And so I think people are going to go and focus on more important things to some degree, and I hate to put it like that, but they're going to focus on Q2 earnings, or sorry, Q3 earnings that are about to start to get reported soon. They're going to focus on what's going on with the AI trade, and then they're going to focus on the most important, arguably, unfortunately, which is rate cuts, which has been kind of the stimulus, you could argue, since COVID, and if you want to go all the way back, since Lehman. And you're going to get a rate cut on October 29th, and another one probably on December 10th, and that's just going to keep this irrational exuberance alive until the rate cuts stop, at which point we'll have to deal with reality again. But right now, enjoy the ride. I think it's going to be great.
But you call it irrational.
Yes. Yeah, I mean, because think about it this way, right? We have a history of this. In the late 1990s, every internet company was going to win. Now, think about where we are today. How many have won in search? You got one. You got Google. How many won in social media? You really only have one. You got Meta. How many's won in e-commerce? You got one. That's Amazon. And you have a bunch of smaller players, obviously. Now, if you look at the AI space, people think everybody's going to win. Everybody's going to be worth $1 trillion. And that's ultimately going to coalesce down to a few players. But in the near term, when you've got rate cuts, when you've got animal spirits, people want to believe. And if you go back to the late 90s, NASDAQ was up 86% in 1999. To start the next year in 2000, the S&P declined 5%. But the NASDAQ was up another 24% in the first, 2 months and change of 2000. So right now, people want to believe. There's no problem with these circular investments that you see happening. Or not everybody putting up great numbers in AI, but until people start to deal with that, the market, much like in late 1999 to 2000, I think keeps going higher, fueled by rate cuts.
So, Dan, do you think the rate cuts, the ones we're likely to get, are purely just sweeteners, or are they necessary to keep the economy from buckling a little bit here? And what are the implications of that if we don't, quote, need them?
I don't think you need them, but our job isn't to try to figure out what should be happening. It's to figure out what you think will happen. So the analogy I would draw is I remember being on your program back in 2021 saying, how the heck is the Fed thinking this is transitory? But they did. They didn't raise. And the S&P finished the year up 27%. Now, obviously, 2022 is a different story when they finally figured out maybe the worst inflation in 40 years isn't transitory. And they started to raise in the most aggressive manner possible. So right now, it's hard to argue you need these extra rate cuts when you've got GDP growing at 3%. You've got inflation that's been above target for 4 years. But none of the reality matters, unfortunately, which is the Fed saying this is transitory as well. And so they're looking at the jobs picture, which is obviously you've got negative numbers coming through. Now, also, you don't have immigration, and you have people, aging out of the workforce. So you can say, well, how many jobs do we actually need? But if you really have a dual mandate, how do you justify cutting when inflation's nowhere near your target and you're saying it's transitory again, and you really screwed up not that long ago? But that's reality in terms of what might be going on underneath the surface. But what I'm trying to say is in the near term, I don't think any of that matters like in 2021.
So let me know your thoughts on all of this down below in the comment section. How are you playing this? Are you just, long-term buying on any weakness? Are you hedging here? Are you selling options? What are you doing in your positioning in Tesla stock? And what are your thoughts over the next couple of days? Do you think we get a recovery in relatively short order or not? So that is it. Ladies and gentlemen, have a great rest of your day. And I will see you in the next one.